development sides of the square. And the timing could not be better. Just last week, Janet Yellen, the U.S. Treasury Secretary, announcing the old fears about cryptocurrencies being used mainly for criminal transactions. But at the same time, we have a retail and institutional investor bull market for cryptocurrencies, driving the price of some to an all-time high close to $40,000. On the policy side, we have continued work being done even throughout 2020 when we saw COVID-19 dominate. The central bank digital currency memo that came out from the Bank of England in March 2020, and of course, Governor Bailey's September 2020 speech on the topic in support of innovation, caution, and moving forward together. So before we get into this great discussion today with our panelists, let's just take a minute and talk about the structure of today's discussion. The first 30 minutes will be a public forum, and all comments will be open to the public. We have Sheila Warren, the head of blockchain, digital assets, and data policy at the World Economic Forum, going to come on for the second 30 minutes, where we'll be able to have a question and answer session by invite only for the participants who are part of the forum. So let's get to our panel. The first panelist, and we're going to give quite a brief introduction. Of course, all of our panelists have an esteemed background in history, but let's just stick to the introduction today. So we have Her Majesty Queen Maxima of the Netherlands, the United Nations Secretary General's Special Advocate for Inclusive Finance for Development. Welcome, Your Majesty. We'll have Andrew Bailey, the Governor of the Bank of England. Welcome, Governor. We have Hikmet Ersek, the President and Chief Executive Officer and Director of the Western Union Company. And finally, but last but not least, Glenn Hutchins, Chairman of North Island Ventures, a crypto venture capital investment fund, as well as the co-founder of Silver Lake. So let's get to the discussion. The first question will go to Her Majesty Queen Maxima of the Netherlands, the United Nations Secretary General's Special Advocate for Inclusive Finance for Development. So Your Majesty, let's put this topic into context. Can you share any historical examples that come to mind that could provide us with some lessons for the design and governance of digital currencies?
Thank you very much, first of all, for having us here and being able to discuss this very important issue, which is very much part of the future of all of us and very important for financial inclusion. And talk about history, I mean, we're in Holland. I would say the first sort of neo-central bank was probably here from 1609 to 1820, the Bank of Amsterdam. If you can imagine all these traders in the golden age, they were handling different coins and different letters, and there was a lot of confusion about it. So they actually set up the Bank of Amsterdam and they put themselves, the first I would actually say early stable coin. So they actually put their gold and their silver, and they created a stable coin. It of course made payments much cheaper. They had a single currency finally, and they made it much easier in handling coins. Now, this of course with trade, it flourished around the world, and the guilder kept on growing all around Europe and the world. Now, at one point, this was quite rigid, so they had to go into a more flexible role of it. They have to not only have the small payments, but also give liquidity to the much bigger payments, and also acting as a lender of last resort during crises. And of course, always trying to maintain the stable value of the guilder. So these are the two issues that are very important. Number one, the design of the stablecoin and all the features therein to actually make it, stable, flexible, and actually giving the lender of last resort, etc. And the other issue is the governance, because as the bank started to give much more credit and taking deposits, it was actually the governance of the Bank of Amsterdam that gave the trust, not so much basically the assets that were backing this guilder. So, so that's extremely important to realize that we've actually went through these situations. And what is actually very important is that what happened in the end is that going back to the governance issue, is that the Bank of Amsterdam, they were actually very chummy with some of the traders, and they overstretched their indebtedness to some of the traders. And of course, that meant the fall of the guilder at that point, in which the Bank of England took over as a European, I would say, currency of the day, which basically gives us, again, how important the governance on a stable currency, how important the design is, that it has to be stable, but at the same time flexible enough, and it has to be able to provide sufficient liquidity. So, and the last thing is some kind of fiscal backing, because that's actually what happened with the Bank of Amsterdam. When their run started going, there was no merchant that wanted to even put more capital there to really make the situation be stabilized. So maybe some of the lessons learned from history for us to maybe apply in the future on any new types of currencies that come along.
Interesting. The first stable coin from Amsterdam. So we'll be referring to also CBDC, so central bank digital currencies, when we talk about some of the things you mentioned going forward in this discussion. Interesting to hear from a historical context. I'd be interested for the next panelist to discuss also whether the centralized versus decentralized aspect of what you just mentioned. So this next question is for Governor Bailey and Glenn Hutchins, who perhaps might have the same point of view on this, but let's hear it. Are we here to stay now with digital currencies as part of the financial ecosystem? I mean, there are...
Hello, brothers. So today what we're going to be discussing is the resetting of digital currencies, option 1. All right, brothers. So you have different speakers. Sheila Warren. Okay, she was a previous speaker from the last year at the WF. Okay, here's a little background on her. All right. So she AZA Finance. So I was like, okay, let's do some real research. So it's involved in frontier markets and currency pairs involving African currencies. So they're a finance service. So more than likely, she actually has her backing from large American banks, because I'm hearing an American accent. So Zero Transfer, or Transfer Zero, is AZA's B2B2C product. It grew from API offering purchases of Transfer Zero in January 2015. Enables companies such as money transfer organizations to integrate their services, trade, and allow their customers to send money to end users in Nigeria, Uganda, Morocco, Ghana, Tanzania, Senegal, EU, and UK. BFX, B2B, over-the-counter platform for business paying partners and suppliers across borders. Settlement is done through bank accounts in Nigeria, Uganda, etc., etc., etc. So we did a video about AZA. Well, no, I didn't. I did one about the DBSA, Development Bank of Southern Africa, and they had invested in Aqua Solutions, sustainable technologies, the use of different Nigerian oil to push Caterpillar Bobcat machines in development, solar fields, etc. So they have a lot of things that they're actually putting money for. And I did videos in 2017 about that, bro. So it's been a while. All right. Hopefully you guys can check that out. Okay. So, and they acquired BitPesa in 2019. So, oftentimes you see people like this, they're not grassroots. They have big backing, huge backing, large companies. So let's go on. So we have Nigeria from Forbes Africa. So you had different situations from ATM fraud victims, and we're going to go into this article. We had employers that were actually defrauding their employees, stealing money from them, and going and cashing their checks because they had the ATM, they had the routing numbers, they had their PIN numbers. So they would just go create ATM cards, and this was a big problem, fraud from ATM, so cash, fiat currency. And they're now switching over to cashless society, so they have a cashless Nigeria policy, I guess. And 2013 report, Nigeria Deposits Insurance Corporation identified 14 types of electronic fraud, e-fraud. Your ATM fraud, which was a prime suspect, not crypto. It accounted for 10% of the total value of funds lost, 46.3%. Okay. So this is something that has occurred, and Nigeria is trying to move towards a cashless society, and we move into the stable coin of Amsterdam and Queen Maxima of the Netherlands. I've seen her before. I don't know where I've seen her. I don't know. I'll be linking this article, and I'll be giving you guys a PDF. Okay? Very good article. You got to read it. So the stable coin. So trust is the bedrock of a sound monetary system. So this paper, which is a good paper, it discusses the rise and the fall of Amsterdam's currency from 1609 to 1820. It gives you insight in a centralized banking system and money. So let's go down. The paper draws lessons from the Bank of Amsterdam for the governance of money. The early operational framework of the Bank of Amsterdam resembled a stablecoin, where account-based money was backed by assets of stable value, where money stock is managed passively by the inflows, outflow of assets. I guess they would probably use gold and silver and probably copper or, some type of metal. I think they probably use the same thing if we're going on a gold standard, which we had here in America and many banks have. So let's see. Let's keep on going. Over time, the bank began to use its balance sheet in more of a elastic manner, fractional reserve, lending out stuff that they didn't have, and to take into some functions central bank, including lending activity through, overdrafts. In 1780, the bank's lending activity grew excessive and led ultimately to its downfall. Empirical analysis with monthly balance sheets shows the data confidence in Bank of Amsterdam money as reflected in a premium, their metal coins. Gold and silver? Let's see if they say that. Share of loans and banks' assets increased, while short-term fluctuations, lending had little impact of confidence in bank money. The Bank of Amsterdam rise and fall provides many useful lessons. It resonates particularly loudly for the current debates in the nature of money and the role of central banks. First, rigid stablecoins were poorly situated and modern monetary system. Secondly, the central bank plays its role in fiscal backing of sovereign and fiscal sustainability are essential. So it draws lessons in this paper. The fall of the Bank of Amsterdam, 1609 to 1820. The bank started out as a stable coin. It issued deposits, but there you go, backed by silver and gold coins, and settled payments by transfers across deposits. Over time, it performed functions of modern central banks, and deposits took on attributes of, fiat currency, money backed by nothing. The economic shocks of 1780, large-scale lending and lack of fiscal support led to its failure. Using monthly balance sheet data, we know how confidence in bank money gave way to run equilibrium. So, on deposits of coins, agio into negative territory was swift and precipitous. This holds lessons for governance of digital money. I'm going to link this article to you guys. This explains what she was talking about. I could barely hear her. Her connection wasn't so good. So this explains what she was discussing. Okay. And then we go into why it probably failed. Well, England was the biggest navy at the time, and they were taking control of that transatlantic route. And, you had the Dutch East Indian Company. So you had a lot of things that were happening, a lot of investments that were being pulled out, a lot of things that occurred. It is what it is. So their money was going to take a hit, and it did. And many European countries have situations similar, but we don't want to go into that right now. So here's an article with Janet Yellen, and she was talking about Bitcoin, how she wanted to curtail the use of Bitcoin because she assumed that it actually led to criminal activities. Illegal financing, which was discussed in this video from Hutchins, who discussed that paper money. There you go, Glenn H. Hutchins or Andrew Bailey. I forget which one it was. I'm going to go with Hutchins or Bailey. He discussed that most of your criminal activity uses $100 bills, 90%. So they use fiat currency. So this article expresses a little bit of this. So Janet Yellen, President-elect Joe Biden's nominee for Treasury Secretary, suggested Tuesday that lawmakers curtail the use of cryptocurrency such as Bitcoin over concerns that they are mainly used for illegal activities. So 300% past year, Bitcoin was down 7.59% to 34 racks on Wednesday, while Ethereum was down 9.4 to 1.25 rack, hitting all-time highs. Yellen comments suggest the incoming Biden administration could be hostile to cryptocurrencies and ramped up regulations. So, watchdogs around the world, from European banks to UK financial regulators, have suggested concerns of crypto like Bitcoin. Okay, so, and they state that most of the cash currencies, fiat, were actually used for crime, which they are. And you have a lot of bank institutions that are actually complicit with this and are actually allowing people to send money and launder money through bank services and things of that nature. So let's go further into the article. Okay. So you talked about terrorist financing. But yes, let's keep on going. Okay. Bitcoin bulls are hugely excited by the recent jump in cryptocurrency price. The king of crypto is the base layer for the emerging alternative finance. Okay. So it's making a lot of money and they don't have really that type of tight control over it. So this is an article from BTC Peers, and this debunks the false narrative as Bailey or Hutchins stated in the video, which we just saw that video. Okay, bros. So, and it discusses many things in this article, and let's get down into it, and we'll be back in a second, bros.
The single largest vector along which organized crime operates is U.S. $100 bills. Because they are untraceable, essentially, and they're fungible, and people can use them anywhere they want. The Bitcoin, in contrast, leaves a permanent auditable record called the blockchain, and that's why almost all the Bitcoin criminals are caught, because they leave footprints that are permanent and auditable. And most people from law enforcement understand this. It's a consequence, this is just an example, as a consequence of which I think it's wrong to say that Bitcoin transactions are primarily used for in criminal enterprises, because if you actually look at the use statistics right now, that's just fundamentally wrong. And so I think those sort of understandings of kind of what happens in this industry and how it operates, how it compares to the economy that we're superseding, need to be overcome with a fair amount of education. So that's the second thing I worry about.
Interesting. So we hear also, I agree with you. A lot of the business models are hybrid models, because it is still difficult to go end to end. But I hope we have turned the corner on the criminal activity argument, because there is so much innovation and it has been, almost a decade of innovating in that space. But how do you regulate something so innovative when it can be argued that we haven't mastered regulation on the traditional financial sector? And certainly as part of the fintech community, there's a lot of complaints in the fintech regulation that it's not.
What do the facts say? All right. Although there's been incidents and reports of cryptocurrencies being used for financing of illegal activities, in 2021 report from Chain Analysis revealed that 2019 only 2.1% of all cryptocurrency transactions went into criminal activity. That is roughly 21.4 billion in transaction volume. Surprisingly, the value dropped to a mere 0.34 in 2020. Again, you have peer-to-peer systems. You have different people that have to validate different transactions. About 10 billion. Meanwhile, the UN estimates between 2% and 5% of global GDP, that's between 1.6 to 4 trillion in fiat currency, goes into illicit financing and money laundering every year. To paint the clear picture, criminal activity using fiat currency is 160 times more than its crypto counterparts. That being said, before trying fault cryptocurrency, you got to really start faulting your fiat currency. Okay? So in recent time, regulators have gone after privacy coins. South Korea, for instance, ordered all local crypto exchanges delisted privacy coins, citing money laundering concerns. However, according to a report of Rand Corporation, a significant portion of cryptocurrency transactions happen through centralized exchanges. Okay, AML, KYC procedures similar to what is existent in traditional financial institution. if up to 99% of cryptocurrency transactions happen on centralized exchanges that have KYC in place. Judging the entire industry with remaining 1% is simply short-sighted, commented one of the foremost privacy protocols, Zcash. I like Zcash. Is a cryptocurrency that uses zero knowledge proofs to provide enhanced privacy for its users. However, there is little evidence that it is exploited by malicious actors. So, with fiat, Swift currency, okay, you have 390 million enforcement against Capital One. The regulators accuse the firm of willfully and negligently violating the Bank Secrecy Act, BSA, and accusing to admit it to an accusation to which they actually say, yeah, of course, yeah. The firm also admitted to failing to file thousands, of suspicious activity reports regarding business units known as check cashing group. Throughout their actions, it went unnoticed from 2008 to 2014. Millions of dollars have been diverted to organized crime, fraud, and tax evasion. Needless to say, Capital One is America's bank holding company, and it was founded in 1994. Wow. Now that's a big one. Okay, bros. So, you guys got the information. All right. So, resetting digital currencies, they're going to be doing the second half behind closed doors. Thank you guys for watching. Peace.